Hi, my name is Felix Frey.
And I'm Marco Rajnica.
We're here to find great trading opportunities that target 150 to 400% returns. And you? Well, you're going to help us do it every single day. So welcome. This is the Winning Picks Podcast. This podcast is for educational purposes only. Options Geek LLC is not a broker-dealer. Options Geek LLC, Felix Frey, and Marco Rajnica are not registered investment advisors. Keep in mind, options involve substantial risk and are not suitable for everyone. Please consult your own investment advisor before doing any trading. Make sure you read the full disclaimer at the end of this episode. Mr. Marco.
Hey, Mr. Felix. How's it going?
How you doing today?
What you got for us?
You know, this Bitcoin stuff is going nuts. I mean, it's like up and down. It's the big move before it makes it a moonshot to 100, gets everybody out, goes to 100,000, or actually gets everybody in here on buy the dip and then moves them down another 20,000. You know, somehow or some way, I've said this as it keeps going up. I actually think it's got to make a move back into the teens for whatever reason. I don't know why. I just think maybe it's a 1 hour, 1 hour thing. We're just trying, but for the way the chart is and how it moved up, to me, somewhere around the teens is where I think at some point it might hit to really spook everyone. Like in order to get to 500,000 or a million, like Kathy would want to, you got to get this. You got to get a lot of the weak hands out, and I think the weak hands is right around that teen range for whatever reason, just looking at the chart. But I wanted to just talk about even today. I mean, look at we've been saying why at 416 is what's going on at 416 and a half, right? We've been talking about this number forever. It's like a magnet from the thing just traded like 4.7, 4.8, goes up, trades all the way up to like 416.15, and then boom, something comes out, it trades down to, like I said, 416. You can lean against 416 and a half. If it's below that, you could try to lean into that on the short side. The minute trades 416 and a half through it, it's like you got to be long because somehow 416 and a half becomes now the support. Right. That seems to be the level that this market is going against here. So for whatever the powers that be have said, 416 and a half is the mark. That's what I'm seeing today. As far as stocks go, how about this one we talked about the other day? I brought it up. I just brought it up because I liked the story. I thought it was a great story to read about, to understand. It's right in the wheelhouse of what I'm thinking has to happen, and that was this Upstart UPST. Yeah. So I found that just from reading Third Point's letter. Dan Loeb is long the name. They got in it. They spent $150 million in pre-IPO, and then they bought millions, about $1.2 million or something like that after the IPO. The stock had earnings. It traded up. That was the day that's when I was watching it. It traded up and then traded all the way down. We were looking for a pullback. It literally hit $80. Let's look at this chart. This is like ridiculous. I mean, I just started looking. I'm just getting warmed up to kind of understanding how it trades. But it literally, you see my chart here? You got it? Yep. So we had it right around here, just talking about it, saying, okay, like say a pullback. It literally hits $80, which happens to be, just look at this. I mean, you can't make up this story, right? Happens to be right here. So it hits twice over 2 days and literally went straight from 80, whatever that is, $82 to 145 today. And it's incredible. I mean, something like that's incredible. But I'm telling you, just go read the earnings because, a couple of days ago, whenever that was, I mean, when was it? That was already a week ago. Was it a week ago? So whenever that move was, from 110, wow, time flies. So it was about a week and a half ago, maybe last Monday. I don't know. I think I read the earnings transcript, and it's right in, it's in artificial intelligence. It's in lending. It's basically allowing banks to lend more, so the customers get better prices and the banks make more money, because not only are the customers getting better prices, but they're finding them better people to lend to. So everybody wins. And now everybody's chomping at the bit to go get this product. I'm assuming the stock's not cheap, but you could see the power of being able to do that. They're not just doing that in homes. Now they want to do it in car loans. So every time you're at a car dealership and you want to take out a loan to buy a car, they could tell you in literally a few seconds. And they have 1,500 points to actually get your data.
Yeah.
That's incredible. You talk about, here's why it's interesting. People talk about Palantir and they love Palantir because they have this AI answer for these big companies. But they don't have a product yet for, companies that can afford it, right? Mid-tier companies. Otherwise you have, you got to pay them $5 million. That's like the minimum to get their main product. This is something that's going to be in every automobile shop, and they hook it up, and you want a loan? Yeah, go through that. I don't know. To me, I'm surprised it went up $60, $65 in a week, but damn, like that's pretty interesting. And it just shows you what the market likes and what the market's trying to buy here. So fintech, AI, data helps everyone, buyers and sellers. So I think that's still an interesting
And
story.
I also saw some news in there that reminded me of the stock.
Yes.
It's probably this yesterday. Yeah. So
banks to offer. Go ahead. You can.
Could be that they're playing around with this software. I wouldn't be surprised. So
that they're playing around with. Yeah. Well, first, look, that headline's in banks to offer credit cards to people without credit scores. Okay, where have we heard that before? That's like, that could be Upstart, yes, but we've also heard it in 2006, 5, when banks were offering credit, not credit cards, credit cards too, but credit to people to buy homes without any income. Right. And we know how that ended. So I think we're at the beginning. And the reason I say we're really near the beginning of the banks, just literally, the banks have taken in so much money in deposits, okay, that it actually hurts them, because it hurts like the way they report the earnings and whatnot. But they have so much in deposits that they have to lend, and people are not borrowing. So they're just gonna, my whole thesis is that they're just gonna lend to everybody, everyone and anyone. I'm seeing lending stuff on my emails all the time from every angle. People saying, you want to borrow money? You want this? What do you want? I will give you whatever you want. And I just think it's interesting. So, it's this, the banks need to lend. They probably will lend to everyone and everyone. Ultimately, that's not good. I mean, it's good to kind of get money flowing, which, if you think about it, the banks are willing to lend as much as you want, right? What does that do for retail? What does that do for people spending money? People like spending. They like getting credit and saying, okay, I want to go spend. So, that's almost a bullish argument that is a bullish argument, and almost what Jamie Dimon's saying is like, we're going to lend, and we're going to lend to everyone, and we're going to allow people to buy whatever they want, right? Hopefully they can pay us back, but we'll figure that out later on, right? They just saved so much money because they set aside, the banks had a big windfall in the first quarter, probably leading into second quarter as well. They set aside so much for the pandemic that now that the pandemic didn't hurt people as much as they had set aside, all that money comes back on the balance sheet. And so they literally have the opportunity to just lend and lend and lend and keep lending as much money as people need. Okay. But again, what is that? Is that it's good for business? It's good for buying, but at the end of the day, is it really good for, people just overextending themselves on that front? I don't know. You can't crash the market when the banks are willing to say, here, we're going to give you all the money and let everybody go crazy buying whatever they want. So you're seeing retail. We saw the Target numbers. Walmart was good. People are buying. We're seeing the Gap stores. So just in general, we talked about 13Fs yesterday. So I wanted really briefly, I wanted to show you. So 13Fs, the way I looked at a few things, and what I like to do is I like to connect the dots. I think it's important exercise. I think everyone should do it. But I found this that I thought was interesting, because we had looked at Uber. We were all over Uber going, basically after the election, but then going into the first quarter, talking about how it was cheap. Here is, okay, so you have my screen up?
Yep.
So we have the March, you could see this, right?
Yes.
Okay, so we have the March 31st. You see everybody's basically reported here. And you see sort of who owns the stock. The interesting part here is, as of March 31st, who's big in the stock. You had Melvin Capital. This caught my eye, 6.5 million in calls. So that's 65,000 options. And he also owns 5.6 million shares. We have 0.72, which is, remember, Melvin and 0.72 somewhat tied together. The guy at Melvin used to work at 0.72, was one of his best analysts, if not his best. Steve Cohen has 900,000, which is 9,000 options here in Uber. Keep going down just to figure out who has the calls. Invesco has some calls. That's small though. Goldman Sachs, these could be volatility driven, the investment banking books. Going down here, this one was interesting. Valiant Capital, let's call it 1.45 million. So that's 14,500 options. And you could just go down, Miller Value, Uber. Now, what's interesting is Valiant is a guy with Tiger management ties. So the guy who started this, Valiant, used to work he used to work right next door to us, actually, when I worked at Scoggin. So it was John Griffin's shop. Blue Ridge was right next door. He's a former Tiger manager, and he had this guy working for him, and eventually this guy branched out in San Francisco and did his own thing. So he's long. So you have and remember, Tiger management is a little bit more value oriented. You got Miller value oriented. What's interesting, and we saw this in Facebook, is when you get value guys like a Miller Value, and Valiant Capital Value, those guys matched up with, the sharks, where they're coming after the fast sharks, the different types of sharks. These guys are the fast sharks, the 0.72 and the Melvin Capital. They're in it to win it in this quarter, and in general, not always, but they're faster. It's called sharks with faster attention spans, right? Or quicker attention spans. And so it's interesting when you get those two meeting together. That's when you can get a pretty good spark plug. So we had this, and what did we see that in? We saw that in Facebook, right? Where it was the momentum type of guys coming in, but also the value guys talking it up, like Needham. Guy on CNBC was talking it up, and I'm looking at him like he's value, but I suspect that there's also these momentum guys trying to buy options in it. Two different people. That's where things you just need a spark and things could go.
Right.
Okay. So again, I would say, once you do that and you connect the dots. I mean, I remember it because we did on a podcast, but I don't know if you can show that. What I like people to do is go back and look at the YouTube channel. And do you have it there, Marco?
Yep, here it is.
Maybe just go check out the YouTube channel. And you could see here, this was from February 24th in the first quarter, in that time where what we're looking at in the 13Fs. You could see here that they are, they were active here on that day from the 60 to 65s. But you can go through that video and sort of hear us talking about it and understanding what seems like people are doing and how they're getting involved. And that's how you learn, right? Because you're able then to connect the dots from not just seeing it on the 13F, but now going back and looking at it on the YouTube channel. Again, you can just go to the homepage on the YouTube channel. And Marco, can you just show them how to do it quickly? Yep. So you go to the search bar, you type in Uber, and you'll get everything that we said in Uber over the course of the last four months. So these are things that I think it's, again, connecting the dots. It's important to do. Our thumbnails got a lot better, huh?
Yeah.
I'm looking at those thumbnails. But at the end of the day, you're connecting the dots. You're looking back in time. You're seeing it live as it was back in time, what we were seeing, prices. And that's how you do research. So we're doing these clips for a reason, so that we can have this long history of what transpired. Yeah, we can go get the data and whatnot, but sometimes going back and hearing it makes a lot of sense. So that's one thing I think that these 13Fs could help you. Right, we're chasing the sharks. It's good to know who the sharks are. I actually, I'm about to put out a little shark section in 3 steps, and I'm trying to make it engaging for people to read and learn. Right, I want you to know who Steve Cohen is. I want you to know who Bill Ackman is. I want you to really understand how they think, what they're thinking, how they act, and in the markets anyway. And I think it'll be fun. Trying to make it to be fun read, so it's not like you're reading, an essay or some sort of
academic
research paper.
Yeah.
Like whatever. But yeah, so that's the sharks, and I just wanted to bring it up because I think the 13Fs are important, and that's that. We left off yesterday with AMD, right?
Yes,
AMD 74. There was a buyback announced. That's how it got through that number. But the today, you're seeing people. Activity has been again hot in the last 24 hours in AMD. People looking to get involved. Let's see here. There was a seller. There was a roll here from the May 77 and a halves, May 77 and a halves into the August. I like this one because I generally don't try to, it's very difficult to make sense of the first 2 weeks, even sometimes the 3 weeks. But when you got to August here, it was very clear, right? There's 10,000 right there. And this actually, has its, this pops up here. So let me look at this right here, actually. 1030. So this actually might be a, do one more over here. 1068. This looks like it actually could be, now that I'm looking at it, could be a funding play. See here and here. I'm just going to look. Or it just could be straddles. Somebody's buying the straddles. 6.5, 10,000, and 10,000 here. I'm not going to be able to make sense of that, but the people look like they're rolling out here and looking to get into some of these calls. There's just been more calls I've been seeing buying over here, but it's just interesting that above 74, the activity starts picking up in AMD again. So AMD, pops up right on the board, and let's see here, right here on the board, right above 74. So big level. Keep that in mind. I still think it becomes more important back in. Going into earnings in this next quarter coming up, probably in August. Yesterday, I would advise people, there was a CNBC interview with the CEO, and she basically says that they're in a super cycle. The problem is nobody knows when it's going to start, right? So you have this lag, which is the problem, and people saying it's dead money. So we'll push it out, but that's AMD. The other thing from yesterday that I wanted to bring up, UNP. We've been talking about UNP a lot over the course of the last rails and in the last let's call it 6 weeks. Once you get a merger in the sector, everyone starts looking at all the other pieces of the puzzle within that sector. And just to bring in Warren Buffett here. He's always thought the rails were super important, right? Because the replacement value is difficult. I mean, think about for a second what happens if there's no rails. If somehow the rails get hacked like the oil company did, and there's no rails for 5 months. What do you think happens? It'd be a disaster, right? It'd be an utter disaster for the United States. And so they're really important. And without rails, you can't just go out and build a railroad all of a sudden. It takes an enormous amount of money, and they're already built. And so these things have enormous value, and they carry all the goods. There's millions of things sitting in the Pacific Ocean off the port that are falling in the ocean. It's all backed up, and these rails are going to be busy for quite a while, in my opinion. Somebody just bought one of these, just bought another railroad, so it shows the value in them. And they had a bad first quarter. So yesterday, I think it's been interesting. I've been looking at it, waiting for call buyers, and I'd say in the last couple of weeks, in front of the analyst meeting, we saw a call buy here. But yesterday, someone bought the June 225s, June 225s, 235 call spread. You could see that here. And they paid about, let's call it about $3. So stock's off a little bit, but they paid about $3 for it yesterday. They did that in May as well, and now they're back again. So there is interest to the upside in UNP. It's one of the names that I think could catch some wind if the market, as long as the market if the market moves, it starts moving up. I think people will look at these rails and say, okay, they're going to be humming along as Biden's going to build these cities wherever they're going to, beef up the EVs. There's a lot of equipment that's going to be needed, and everything from the ports got to get into the states and go through not only trucking but also through trains. So UNP, AMP from yesterday, I think it's important. Okay.
Why don't we take a look at TECK? I think I saw something there.
TECK's another one we've been looking at for quite some time. Stocks come off here, but let's take a look at TECK here. What is it? TECK, right? So we talked about this one because there were call buyers here. I believe it was right around here, right in March, right around here. There were call buyers. There's more call buyers, and then we saw that David Einhorn spoke, I believe it was last week here at Irisone, and maybe it was here last week. I think maybe Thursday, maybe Friday. He spoke at Irisone. It was probably Einhorn that was buying these calls. He's gotten into the name, and they deal in copper. And they were looking for, when they were buying these calls, we were saying 27-ish, 28. It got to about 26 and 3/4. Has come straight down. But what are you seeing today? This is one where, let's just look at the MACD for a second. Yeah. All right. I want to show you something because so we're looking at this clearly. I mean, it's a bullish chart, right? You have a bullish chart here. You have also a MACD here where price high and also price high right around here. So high and then higher. So I don't see any MACD diversion there yet, which tells me that it's clearly on a bullish channel, and the MACD that means this has to relax a little bit, and then it's got to make another move. Now, what I'd be looking for a high, for a potential high, a potential turn, this may be it, but I like to see it when it goes and reaches. So it trades from 23 up to 30, and then the MACD doesn't actually reach this high, and then that's when you get a MACD diversion. So what are we seeing today? Call buying? Likely.
In June,
Likely.
yes.
Let's see here, June. Yeah, there you go, 53s. Let's take a look. Okay, so we see, first thing I'm looking at is how it traded, 45, 46, 47. So at 9:45, it came in, they paid 56 cents. A minute later, they're buying 57 cents. They're paying up 61 cents. The stock is also rising as they're buying, which makes sense. And the IV is going up, 53, 52.3, 53.9, 54.5. So IV is going up. The stock is moving up while they're buying calls. That's a buyer. Okay, so the guy somebody buys 10,000 here, and yeah, I mean, look, the market's just gotten hit here in the name in a bullish channel where they're still looking at, trying to buy the dips here. So you have this level right here, 22.5, that you could extend even to here, which was a level, and you got the 50-day right here, 22. So interesting time to buy. Again, if you're paying 50 cents on this, you got to be thinking same spot where we've been thinking before. In this case, you're going to have to be thinking about 29, about 29, right? So you're going to need a little bit more. This is the risk reward break. Even though the reason I say 29 is you always need to be a little bit higher than what the market's pricing in. The market thinks 27, 29. It's pricing in 27, 29. So then you got to think, okay, I need something a little bit more. Okay.
Cool. Yes.
Good. I like that. I like this tech. I think it's interesting. Okay. What else are you seeing?
TDOC.
TDOC. I'm all the way down this
Very
time.
interesting name, yeah.
All the way down. Kathy Wood name. Can't get away from her. Let's see. TDOC.
Every day.
Every day. Let's see here. TDOC. Let's go. How far? We go back to the pandemic because this is a pandemic name, so we want to make sure that we see how it was trading prior to the pandemic. Okay, so interesting. I see. All right, what are they doing here? Is it a straight calls or?
No, it's something all over the place, and it's in December of next year. So
okay, let's look at the chart first. Let's see here. So we have here TDOC, pretty easy, somewhere right around here, right? Where you have it started here, a little bit here, and breaks here. Okay, so we have this. Okay, somewhere. Let's see here. This was a little bit over here. It doesn't seem to be matter over here. Let's talk about this 30. A little bit of congestion here. What I'm looking at here is just give it where my eyes are drawn to. What I'm looking at is this sort of volume chunk here. I'm looking at this volume chunk here. Definitely these things, but these already were up. So my eyes trying to look at when the stock was trading around here, where were the big volume areas. So let's go back over here for a second, because I just want to look below. I'm trying to look below. Obviously above, we're talking about 310, which may take a while to get back up there. We're talking about 250 over here. And here, there's sort of a lot going on here, from here up and down, good volume up to here. I'm just going to throw out, what's this number right here? This right here. And how about right around here? Because the pandemic was kind of starting right here, right? So with a lot of volume going on, pandemic holds this. I'm looking at sort of these 2 points down and where it broke out right around here. Let's call it around 100. Okay. $300 stock to 100. That's fine. I'm not going to be perfect here. Yeah, so that's how we look at it. It almost seems like no man's land here. There was a lot going on between, here and here, which is, you're talking about, you're talking the whole range from 100 to 170. There was a lot going on here. You could say something like the 150 level, but you could also say there's a lot of little areas over here. So I'm just going to use it as one big blob from 100 to 170. Okay, so let's take a look at TDOC. Teledoc. Okay. December. This one?
Yeah.
Wow. So that's December 2022. So it's almost 18 months from now. 17 months from now. Okay. And I see what's going on here. Okay. So let's just click on that and see what's going on there. Spreads. So they paid, let's see, paid. So it looks like, to me, just looking at this chart, they're doing a put spread and some call. So put spread and some call. Just looking at this chart, because it's long term, I suspect just my initial guess is that they're selling that put spread to buy the calls. Okay, that would be what I would guess. Sometimes it spreads. It's hard to find. It's hard to determine because it trades mid-market, and so you don't know exactly how it traded or where it traded within the bid offer, and it's 15 months out, so the bid offer is going to be pretty wide. But that's my initial guess. So the guy looks like let's assume that's what they did. They paid 17, right around $1.36 at 16.80. Let's just call it paid 17 for the 195 calls. Write that down. 17 for the 195 calls, and for the 140 puts, these are 31 and a half. Let's call it. I'll just write that down. 31 and a half, and the 110 puts. All right, 110 puts twice at around 17 and a quarter. Okay. So net for the put spread, it was about let's just call it $14, 14 and a quarter. Okay. And for the calls, $17. So net, that is about $2 and change, $2.75. $2.75. Okay, so that's $2.75. So if he did that, what he's basically doing, I think that's what he's doing. I'm not 100% sure. It appears that's what he's doing. I'd have to go in and maybe dissect the actual data, like really to the point to get it. But I suspect that instead of getting long here, they're trying to do it in a way that they can protect the downside a little bit, because they just don't think that. They don't think that the stock is going to go, or they're concerned that if it goes down, it does break through here, but they're willing to take this $30 risk here in order to pay for these 195 calls. That's what I think here. But
okay.
Let's look over here. So 110, let's use a box today. they're willing to take the risk over here
Mm-hmm.
to essentially buy the stock at 195 and above, to own the stock. That going that way. So between 140 and 190, which is exactly at this level, it's in no man's land. It's also interesting that they're doing that because it's basically right at the level where we're showing at 100. So they're basically saying if this breaks, it could basically go down to 70. We don't want to be long it, but we'll take the chance to be long it here for the next 15 months and look for a push up towards 170. Who knows? By the time it gets here, they might not stick around for that much time, but they like to trade because you risk only a couple of bucks. And if it starts going higher, they'll just get out of these and maybe leave these calls. But it just gives them, it's almost like a placeholder for 200,000 shares of TDOC in the time being.
Nice.
Is that fair?
Yeah, cool.
That's what it looks like. It may be the other way where they're protecting against this. And, think about it again. That's one way to think about it. The other way is let's protect between this because the stock is falling like a rock. Let's protect between this. We're definitely buyers here, right? We're definitely buyers at 100, 110. And so we don't want to take the risk in this box. So there's two ways to think about it. Okay. Right. I'm about 60% sure. I don't have the actual data. You can't get the data unless, I could go call up a buddy and say, can you tell me what that was? And maybe I'll do that just to kind of figure it out. But that's the mid-market dilemma that we always go. If we're not 100% sure, we're trying to find the buyer. So let's move on.
Okay. All right. Cool.
How about Ford?
Yeah, Ford.
EVs and EV stuff. Ford, it was interesting. It's interesting to see that, we talked about it coming into the week, where they just on Monday they come in to buy calls. The news is out, and then they immediately just they sold out their calls today. Let's see here. The stock jumped. The stock opened up and went up to about 1270-ish. Those calls went to about 80 cents. They were selling them right from the get-go. So that was today. Now you have a capital day next week, and you'll see these are active. I think a lot of this is just selling out of some of the stuff that was here from the beginning of the week. So these are all just basically taking profits. But there's a capital day, Investors Capital Day, Capital Markets Day on next week on May 26th. Mm-hmm. So you could see people come in, Monday to sort of play this for the week. These things work if you get a good price, or by accident Ford comes off a little bit, and in the morning the stock and these options are cheap and you can buy it and sort of play that game, the momentum game. But the one thing I would note is that the chart looks pretty good in Ford. It looks like it's I like to see the MACD sort of trying to make its way back up here. I just don't like that they're selling. See how they take it all the way up and then they sell it down. Here, right. This dark square here means they bought it higher, took it up. Now it's below the open, even though it's up on the day. So they are selling these bigger moves up. But nonetheless, it's kind of clearing this. It's trying to clear this level at least here, and then we have this going on along with this. That's pretty easy to see, and it's above it here. So and above the 50-day, and you got this moving up. But I would say these people are in it and they're selling. They're selling. So maybe the play is a little bit of time here, and what was it? The F-150 was showcased to Biden, and are people buying it with their orders, or did they say that
20,000 orders already? Yep.
Really?
Yeah. Pretty good. Go. And then they also have a deal with a company about producing EV batteries as well. So that's also news.
So people getting excited about Ford. Yeah, this looks good. This clearly doesn't look like it's a top. It looks constructive, right? It just looks constructive right here, right? Top looks probably more like this, and once it recaptures, then it's okay. Then it goes, and this doesn't look like a top so much. This to me looks like this flag that we just showed trying to break out here, which would push it to, let's call it $14-15. All right, that's Ford. Well, the other name that I wanted to show you was that it's I'm looking at it. It's interesting. Maybe the people that own it or are more involved in the name can tell me. But I saw this trade and I thought it was interesting. Like who would be bought? Well, why would somebody be buying these? But I saw somebody buy these here. Fisker 1122 came in 15 cents. A minute later, 18 cents, 18 cents, cleared it at 18 cents. Who's buying next week 10 puts in Fisker? What are they thinking? Why would they buy that? May 28th next week. Interesting. I don't know why. I don't know what's going on there, but I just thought that was interesting. So there's got to be some thought behind that or something there. And, I did see the Junes here also look like they were selling here, the 12.5s. So you got someone selling out their 12.5 calls, and then another person actually, this looks to close, which is fine. But then you have someone here buying the May 28th puts 8,000 times. What are they thinking? Maybe somebody can tell me what they're thinking there. But look, this is a company. It's another hyped company. If it works, I guess it works. But they haven't even. There's no production. There's nothing going on there. So, 10 is a big level for any SPAC. Maybe there's something next week. I don't know. But I thought that one, piqued my interest a little bit, and I would watch that one into next week.
Okay.
Cool.
Yes.
Good. I one of our members, Dwayne, he mentioned someone owning AMC, and we don't really have an opinion here in AMC. We don't know. It can go up, it can go down. But he had an interesting question. Someone was long a lot of stock and relative to their portfolio, and wasn't really sure they could explain the gamma squeeze. Now we've talked a lot about gamma squeezes over the course of the podcast and how they work. So I did send them to a couple of the videos, but I wanted to point out something in AMC that I think is really interesting, and I did point it out to you, Marco, a little bit maybe a few weeks ago.
Yeah.
But as far as risk goes, and as far as options goes, what I like people to think about it as, let's call it in sports betting, you have you're given odds, right? And at the beginning of the season, the Knicks odds to win the Knicks odds to win the NBA championship, somebody probably give you 100-1, right? Not going to happen. Still probably 99-1, not going to happen. But still, 100-1, not 100-1 says to you what? It's likely not going to happen, right? 50% says, oh, that's likely, right? So just odds. Just Las Vegas was built on these guys who are making markets on scores on baseball games, and people understand that. They understand if the Lakers are playing the Knicks, then in order to make it equal, the sports bettors have to say, in order for people to bet on the Knicks to win, they got to give them points. They got to say Lakers are probably going to beat them by 15-20, and so they got to give the Knicks 15-20 points to match, and that's where the demand for the betting comes. If you give me 15 points with the Knicks, I'll take that against the Lakers, right? And that's where the market equilibrium is. And so options are essentially the same thing for stocks, okay? And that's what we're doing here. So I want to make sure that we see something here to make things. People think there's no risk in owning AMC, right? There's no risk. Stock's going to go up. It's going to 100. I have no idea where the stock is going to go. Okay, but what I look at is something like this. So let's look at the January 20th, 2023. So 1 year and 7 months, 8 months out, whatever it is. The 10 puts at its max can be worth what? At its max. If the stock goes bankrupt, goes to zero, does not exist anymore, the 10 puts can only be worth $10. Okay? It only can be worth $10. Right now, if you wanted to buy the 10 puts, you'd have to pay $4.86. Okay? So how much can you win? How much can you win in total maximum? What's the total max you can win? $5.15, call it.
Right.
Okay. So you can lose $4.85 or win $5.15 in the event that it goes bankrupt. What is that? What game does that sound like? Sounds almost like heads or tails, right? It's like 50-50. It's the market's kind of giving you this probability of 50-50 saying this is what's going to happen. I think that's important. If you want to understand risk and you want to understand, and that's what I'm trying to teach at Options Geek, we're not playing the game of up and down. We're playing the game of risk reward. It's a different game. It's chess versus checkers. It's just two different games. Same board, a lot of pieces. It's just the moves are different and what you're thinking about is different. So when someone says I'm long AMC and I show them that and I try to say, hey, look, if there was no chance for AMC going bankrupt, where would that be? That'd probably be somewhere like $1 or $1.50. It has to be worth something, but it's going to be worth a lot less. Mm-hmm. And so it's not perfect, and that's not a science. But what I'm trying to do is show you, if you fast forward to Jan 2023, the market's kind of saying, take out all the time. You spend 45, the max you can make is, this is the risk. So there is risk. The market is saying, hey, look, there is risk. It's not saying that it can't go up, because in the same vein, you can look at it and say the shorts are saying this thing is going to go bankrupt, and the bull person says, yeah, but why is it trading 12.5 right now? Why is it here? If everybody knows this and everybody sees it, then what is it doing here still? And this is where the game of, where's it going to go starts to come to effect. So you could also look at it and say, all right, if they're giving 50-50 odds that it's going bankrupt, then the stock by itself has to be somewhere around that sort of 50-50 odds, right? You're sort of saying, all right, well, if I'm going to play the options and sell those puts, I'm giving someone 50-50, or I could short the stock or buy the stock. Where's my target? Well, if I can buy the stock at wherever it is, 12.5, where's the stock? Let's call it 12.5, then a coin flip on the stock is 25. So now I got to be thinking, all right, 0 to 25, that's sort of where I'm living. But then you have the Jan 30 calls at around $4, the 40s at 330. So what that's saying is something a lot different. It's also saying, hey, you can get odds. You can get odds if there is this short squeeze that people are talking about. If, I'm not saying there will be or there isn't, but if, then people, the market is pricing in that chance all the way up. That would be a hell of a run. But you know what? People said that about GME. So you can never discount that it can happen. That's the unlimited. The reason why the puts, I can look at that is that's limited. I know it can only go to $10. And the only way you can buy the 10 puts is to pay almost $5. It's like a coin flip, 50-50. So, and then you think, well, who would do that? Well, then sell it. Why don't you sell it? And you don't see people selling it. You don't see people selling it at 475 or 460, which is also telling you something. Somebody's saying, you know what, I don't want to take that bet because they have their fundamentals that are saying, you know what, they're going to run out of money, and we think they're going to have to raise money through issuing shares. That's the bear case. So it's a timeline. So what's transpiring here is from 12/30 to the next 15 months, and we'll see how the game plays out. But that is just saying what the bull and bear is, but also trying to give you, hey, just look, there is risk. So if someone comes in and says, I have $100,000 portfolio and I got $60,000 on AMC, and I say, wow, like, would you go and play black or red on roulette at Las Vegas on one spin of the thing? Would you go do that? And most people say, no, I don't want to do that. And say, well, you know what? The market's trying to say, I get it. That's an immediate gratification, the roulette game. But, the market's saying it's about a 50-50 shot here. It's not like, there's, this massive edge, and so I'm not saying, if you think it's going to 30 and you can make 2 to 1, you got to go to 36 now to make 2 to 1 on your money, right? 200%. Yeah, then you that's okay. That's what you think, and that's fine. No, but you got to size it correctly versus your whole portfolio. Mm-hmm. If your whole portfolio is only 100,000 and you're going to flip a coin over 17 months on AMC, you can get caught here on a big chunk of your portfolio. So this is what we're trying to teach. We're trying to teach sizing of the trades, trying to teach what the risk is. But it's a little trick that you can use if you ever want to see, for example, when Tesla was going from 350 to 180, the 10 puts were starting to be worth some value, because if it was a fraud or it went to zero, then people would say, you know what, I can make 100 to 1 on this trade. That means the market's saying it's a 1% chance. It's 1 out of 100. And if you think, no, it's not 1 out of 100, it's more than that, then that's where you start thinking. So with the longer term stuff, there's sometimes, ways to think about it as far as odds. And, because there's that limit, because it's limited at 0, you could say, if I think it's going bankrupt, or there's a chance that it's fraud, it's $4 to make 10 or to make 6, or it's $2 to make 8, right? And that can sort of give you some probability. Okay,
cool.
This also lends to the idea that there is what's called capital structure arbitrage. Okay, which is basically just a funny way of saying you can go buy bonds in a company, and then what sometimes when interest rates are a little bit higher generally and volatility is low, you can buy bonds in a company and collect that coupon, and then go buy options against the probability that it goes bankrupt. So let's say let's say somebody's offering, when interest rates were higher, they offer 6%, right? And you give them $100, and you're going to get $6 for the next 5 years. And you think, okay, fine, $6 for the next 5 years, or the next 2 years, say, because we have leaps. So next 2 years, and you're saying, all right, so if the company doesn't go bankrupt, they're going to give me I'm going to get my $6 and my $100 back. Okay. Right. So that's good. So what people were doing was they're saying, okay, well, I'm going to buy the bond. I'm assuming I'm getting my $6, and I'm also going to buy like real cheap puts for like a quarter, because if the company goes bankrupt, the stock has got to go down to 0. So if I can, and that's arbitrage, right? So I'm going to collect my $6, and I'm going to buy these puts, and I'm going to lever it up 5 times. So now I'm going to get a loan, lever this up. I'm going to collect not $6. I'm going to collect $6 times 5. That's $30, right? For 2 years. I'm going to use as money. If I can get cheap puts that protect me against a bankruptcy, then I have an arbitrage. Okay. It's not easy to find, but I learned this because Elliott Associates, Paul Singer, got me on a couple of these going back years ago. And they're smart, right? I'm using options in stock. I'm not even looking at bonds, and they have the whole capital structure, and they're looking at bonds, and they see it, and then they go, okay, let's go to Felix and buy those puts. I look at the puts and I go, they were doing this in years ago in Tyco, I remember, but they were basically, exactly what I said, they're buying the bonds, they're going to collect this money, they can leverage up the bonds, and then they can actually buy what looks like expensive options to me, because I'll look at them and like, they look expensive. How many do you want to buy? And they'll say, I want to buy 20,000. Like, all right, say 20,000. Meanwhile, they were willing to buy 300,000, right? Because they were leveraging the bonds, and we couldn't figure out like, why would they buy these? Why would they? And the appetite. So, here's the street smarts. You sell them 20,000 at a quarter, say, and you're like, all right, fine, Elliott, we need their business, and we want to. Here's at a quarter, and then they say, yeah, where can I buy another 25,000? Like, whoa, how many do you want? What? I just sold you 25 at a quarter. All right, maybe I need 50. Like, you want 50,000 now? 50,000 up 40 cents, and then he takes the 40 cents kind. You're like, okay, now what's going on? Now I'm stuck. I sold 25 at a quarter. Now you just paid 50 at 40. Okay, I'm averaging up, but I'm like, we're done, right? Yeah, sure. Literally 3 days later, someone's paying 60 cents, 70 cents at like Goldman Sachs, and I'm sitting there calling up, Elliott, saying, what's going on? Oh, it's not us. It's not us. It's somebody else. I don't know. What's the trade? What's going on? You just killed me. I just lost a significant amount of money, 30 cents, but I lost it 7 million times. It starts adding up, and then all of a sudden hundreds of thousands before we're also smart too. The minute you start seeing it start trade like this, we're all asking questions like, what's going on? And then all I'm trying to do is buy it back, right? I'm trying to go into market. You get 60,000 at 60 cents. I'll take my loss and say, I'll buy 60,000 there. So everybody gets caught. And a lot of times they do it OTC. So nobody can see it, right? Because if they do it OTC, which is slick, if you have a trade and it's that big and you do it on the market, people start asking questions. Wait, what just happened? What's going on? But if you do it OTC and it's private, I can't see what Goldman's doing. So then the hedge fund goes to, say, Goldman Sachs. They go to Morgan Stanley. They're doing OTC trades. And all of a sudden the positions getting to be like millions and millions and millions of options. Meanwhile, I'm thinking, it was some at 25, 40. Oh, how many do you want? 250? Okay, with some at 50 cents. And they take them. So that's capital. It's called capital structure arbitrage. And that's where I learned sort of, okay, you can look at it this way. But this was years ago, 15 years ago. And like I said, it usually works better when there's an interest rate. Right, there's no interest on bonds. But as soon as interest rates start going up on these bonds, that trade starts coming back. So you can buy the bonds, you know that you're going to collect interest, and then you can go buy puts smaller than the amount of dollars that you're going to get, and then you can lever that trade up big so you can make 20-30% on that trade.
Nice.
Arbitrage, like actually risk-free.
Nice.
Like that. All right.
Yeah,
So anyway,
that's awesome.
Cool. So that's something to think about, and just a story from the past.
Cool. You wanna you promised me another story, but we got a couple of things we got to cover, like Apple and Tesla updates.
Okay. So let's look at. All right. So let's look at. I mean, look, we'll do our quickly daily update in Tesla here because everybody loves to think about Tesla. I simply want to look at this trade because I think over time you're going to learn something, and you're going to learn how it feels to be in this trade, right? What it looks like. So we're looking at in Tesla, it was the 640, 550, and we'll do this every day for a minute just to kind of give people an idea and watch it. We were doing this 640. So right now it's trading, let's call it 71 and a quarter into 550s, which are, let's call it 21 and 3/4. So 21 and 3/4 times 2 is 43 and a half. 43 and a half less 71 and a quarter is 27 and 3/4. Okay. So 27 and 3/4. Yesterday it was worth 25, right? It was worth 25, and the stock actually went up.
Wow.
Today. So you actually made money on that trade. So remember we talked about how this trade will start expanding as long as the stock doesn't move 60 points up. And even then you'll still be okay. 60 points up, 60 points down. We're in a good situation with this particular trade because it'll just start expanding. If it goes down to 500, it's fine. Goes up to 600, it'll be fine. The point is that over time, we're going to, day by day, that's the decay that we're seeing. Day by day, we're seeing it expand.
Yes.
Where it gets hurt, where you start getting hurt is if, okay, it goes down to 400 and that's no good. So then you're long. Remember, doing this trade, we had to agree that, you know what, we'll get long at 460. Okay. If you want to look at, Tesla today is, there's nothing really to talk about Tesla today. It's up. That's it. It's up. It's this 200 day. I haven't looked at the market since we started, but the market was trading off a little bit. The market looks, 416. I suspect we could wake up. It trades above 416 and it can just keep going for a little bit, but 416 and a half is the level. This Tesla at right here, it's a little bit of a magnet. This is a big level here. And, I can tell you that the open interest in Tesla has caught up a little bit. So, you get a little bit of friction. Let's call it, 540 to 620. Sorry, 540, 620. A lot of the open interest came out. It's about 14,000 here. And after that, there's nothing for next week. So I am concerned about this market next week. Zero Hedge, if you can go find it. They have an article that where is it? This article, it's not the easiest read, but it says Gamma Tilt suggests more downside in stocks as Bigly OpEx looms. Basically, there's a lot of open interest in this week. It's the May month, and they're like stop signs, these things. So Tesla here, 14,000, a little bit of a stop sign. That doesn't mean it can't go through quick if the market sells off. But this is I'm concerned about this week. See where it drops off. 475. There's something. It's likely a lot of these are sales. So that's where the danger comes in. A lot of people think, there's a lot of sales here, probably, right? People say, I'll be a buyer Tesla at 460. I'll sell those puts. I'll be a buyer Tesla here at 475. There's a lot of that going on, and that's where the stock can get into a little bit of trouble if it goes lower, right? Because that goes down and it'll go down quickly. It could go down quickly to sort of wipe these people out, whoever sold those options. Which, by the way, in our trade, we're sort of one of them, right? We're 550 and we're holding in June, starts going lower. We're getting long at 460. So all this starts going down. That 1x2 it's not going to look so good. But I want to go through it with you. I want us to look at it every day to sort of get you to see how it trades. It's important to watch it live. Okay?
Yes, nice.
Good.
Awesome.
What else do you want to go after next here?
Mm-hmm.
Do you want to look at Apple?
Yeah.
I did owe you a story. I owed you a story on.
We can do that next week. Yeah, it's a good one.
Next week? All right. We could do it if you want it. How much time we got? I mean, what's the time here?
We got 5 more minutes.
No, we don't have. Maybe we'll do it. Today's Thursday. Today's our last day for the week, huh?
Yeah.
We'll save it. How about we save it for Monday? It's another risk reward. We did some with AMC, so we'll do that on Monday. How about what else do we have? Any other ones? Questions? How about MGNI? Did you see this trade today? MGNI?
Yes.
That was interesting. The MGNI is. Let's look at here. Actually, I want to look over here. So it looks like, coming in today, there was about 5,000 options in the 35s. Okay, we could see that right here. It looks like if I just don't look at this 8,000 for right now, it looks like someone sold the 3,000 puts, bought the 30-40 call spread 6,000 times, 6,000, 6,000, 3,000. Okay, so they're getting long at 25 and they're buying the 30-45 call spread. And then the 35s here, it looks like they sold it and maybe sold a little bit more to add to this call spread. Okay, that's I did look at the numbers. That's the best I can come up with. That's what I think happened. So 3,000 sale, buy, sell, and then the 35s selling out to close. Okay, so getting long here, MGNI. Let's look at MGNI. At 25, and you see that 25 is actually decent level, right? You got the 200-day moving average right here, right around 25-ish. 34 seems to be the number here. So they were looking at the 30-40, 30-40. So looking at that call spread, and they're going to get long here. This is a level, we got into this level right around here. And it was difficult to get into the two, but that's where we were looking at it. Stock shot up. It's come a long way down here. This is what I would say someone's doing here. Okay, so that was MGI, decent sized trade, but I think these guys are also connected to Disney. Ultimately, I think Disney might buy them out. I think that's what people are thinking as well. They're very tied to helping Disney streaming and everything else work on with advertising.
Right. Okay.
All right.
One more I saw was HOG. Actually, he just
HOG
popped up while we were
Harley Davidson.
Yes.
So I'm just watching Sons of Anarchy right now.
Nice.
So I'm liking all these. That was a crazy series. This is a crazy series. Sons of Anarchy. All right, so 21,000 here. What do we got?
Okay, so it looks like they closed those and got into the ones a week earlier.
Okay. 50s. They're selling the June. Let's take a look. Let's just look first. Where is it? 110, 47.35. Okay, so that's 10,000 on the spread, and they're getting into why do that? Which ones are they getting into?
48.
Wow, it's interesting. Gotcha. Yeah. Okay. So they're getting into this and getting out of that. So for 1 week, they basically just roll. Why not just stick into the June 18th? Let's see, 178. Why not go here, right? Why not go from here to here? Instead, they go to the 11th. So I see something here. Let's look at this chart for a second. I just want to see something. So, okay, so we have this level here that broke through 43, right? And we're looking at around 32, 43, and then down here, 22. So call it 22, 32, almost 42, 43, 52. It's coincidence. And they're buying which ones? The 48s now? 48 calls. Yeah, they're rolling down to 48 calls. Okay. kind of like it. I'm confused why they would do. Why would you go 1 week and why not just stick to why June 11th? I think that's what I'm asking. So I think we would have to dig a little bit to figure out if there's something going on, an analyst meeting or something that they felt the need that June 11th was the date that they needed to be long these calls for expiration. Either that or they're just saying they didn't want to spend. How much did it cost them? $1.20, $1.25, and let's call it $1.75. Maybe the manager said, I don't want to pay more than a couple of pennies. Like, find me something to get long without spending a lot of money. And so that's what the trader came up with this. Because here you'd have to spend another 80 cents to get down here. So here just knocked about 50. I would have just stayed in. I would have stayed in the 48s unless there's a reason June 11th we're going to get something between the next 3 weeks, and that gives them a little bit, saves them a little bit of money.
Nice.
All right.
Cool.
Awesome, man. I like that one. It's interesting.
Yep, for sure.
Awesome.
Cool.
Be good.
Thank you, Felix. You too. Have a good one, everybody.
All right,
thanks for joining. Like the video, subscribe if you haven't, and have a good weekend.
All right. Be good.
Bye.